Hello again. Welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in today. Today is Thursday, November 4th of 2021. This is episode number 31. And before we get into it, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing. Always take responsibility for your own choices. I shouldn't even have to say that. Let's jump right into the daily scoreboard here. The spot price of uranium moving up today, $43 a pound mid-market, up 75 cents a pound from yesterday. Yesterday's the Sprott Physical Uranium Trust took in $69.7 million in new capital. I said that I expected at least 40 to 50 million. This is now their second largest day in terms of new capital raised since they launched their ATM on August 17th. It closed, they closed yesterday at a 4.72 premium to their net asset value. And like I said, they purchased 700,000 pounds of uranium yesterday, coming in big. On the end of the day at 54, with 54.3 million in cash. Since the 17th of August, when their ATM went live, we're now about 10 weeks in. They've raised $816 million and they purchased 17.6 million pounds of uranium. Just an absolute monster in the resource space. Turning to the ETFs, URA reported no change in outstanding shares. URNM had a small issuance of 25,000 shares. That's mandated buying of 2.3 million, certainly helped the huge trend yesterday, just a huge day in uranium equities. On the back of the strong rally yesterday, the AUMs of the two ETFs increased pretty substantially, 121.3 million increase yesterday alone in their assets under management. That means essentially that the rise in the AUM from yesterday alone almost equates to the entire AUM combined of these two entities just 18 months ago. Big moves here in the uranium sector. Now the combined AUM of the two ETFs, 2.3 billion. Let's take a look at the charts. Starting off with URA, this chart is looking very strong on a long-term time frame. Opened up this morning, sold off throughout the day, saw some dip buying come in. Now it's kind of chopping up and down a little bit, just right near yesterday's close, just about flat on the day. It's pretty common to see a little bit of backing and filling here after such a huge day the day before. So to not see the stock actually close down today is a good sign after such a really large day yesterday. And now we're seeing it form this somewhat of a hammer pattern here. Great to see those dips being bought intraday. Respectable volume, nothing huge compared to yesterday, but still respectable. We're seeing the MACD turn here. In my opinion, we could see maybe another day of this sort of action. And I think we're going to see that next leg up where we'll get into those new, 7+ year highs for the URA ETF and for the sector as a whole. Sprott Physical Uranium Trust, very strong day. Moving up again, decent volume. Obviously, yesterday was a record-setting volume. The volume today, higher than definitely higher than the 10-day average, and they're likely issuing more shares in the market. They're certainly at a premium to NAV still, looking like a very strong chart here, in my opinion. Taking a look at Cameco, very similar to URA here, right? Just down a little bit on the day from yesterday's close, but we have seen some dip buying. I'd love to see that close at break even, if not slightly up, but either way, naturally, you will always see a bit of profit taking after such a huge day yesterday. Looking at the mailbag here, we have a question coming from Gordon Gecko, who left a comment on yesterday's YouTube video, yesterday's episode. Hey, Justin, we know that China were big on uranium, but they seem to be going all in with an announcement of a 440 billion investment and 150 new reactors to be built out over the next 15 years. The stats around what this could mean are mind-blowing. It would be interesting to hear your views on how the scale of this news plays into what is already a very bullish thesis. Thank you for the question, Gordon. Well, first of all, the 450 billion investment is not something that has been committed to this yet. So what this is coming from a comment from the chairman of China General Nuclear, kind of reaffirming what they had stated in their 5-year plan that came in earlier in the year, where they stated a goal of reaching 200 gigawatts of nuclear energy by 2035. Now, that statement really hadn't been baked into the market too much. And now with a bit more color, the chairman of CGN is essentially saying what that means is at least 150 new reactors over that time period. And so essentially, China is really, really driving a big part of the demand story, but it isn't all of the demand story. So what do these numbers mean? 150 new reactors, okay? There's currently 18 reactors being constructed in China right now. 18, that's 30% of the global reactor builds. There's 56 reactors under construction, and China has 18 of them. Okay, so that's obviously China is going in big here, and they understand the implications. They understand that they need for their citizenry, reliable baseload power that's not going to choke them off with terrible air pollution. So clearly, nuclear is a great solution for China, especially. So 150 reactors, if we average that out to 1,000 megawatts per reactor, okay? So 1,000 megawatts of nuclear energy typically means, and we're going to go conservative in these numbers, about 440,000 pounds of uranium per year to run 1,000 megawatts of nuclear, okay? And sometimes it depends on the plant. It can be a little bit more than that. It can be a little bit less than that. But we're going to go conservative here and say 440,000 pounds of uranium per year per 1,000 megawatts. What that means essentially with 150 new reactors, 66 million pounds per year of annual demand, okay? You go ahead and at least double that for the initial core load. Now, obviously, the reactors that are being constructed right now, it's pretty safe to assume that they have that uranium, they have those initial core loads, especially for the ones that are come online in the next year or two, already ready, let's say. But so we'll go ahead and say 150 million for initial core loads alone, followed by 66 million pounds per year of demand from these 150 new reactors by 2035. Kazatomprom, which is the largest producer of uranium in the world, produces around 60 million pounds a year right now. So we need multiple cigar lakes. We need another Kazakhstan. We need another Kazakhstan by 2030, let alone the build out pace that's getting us out to 2035. So really, when we're talking this type of demand from China, in addition to the global demand that's already calculated in a number of these supply demand estimates, we need basically 2 Kazatomproms by 2035. That's really what we're looking at right now. So this is just huge, huge numbers coming from China. They're really calling their shot here. And they, if history repeats, China tends to kind of follow through on these sort of plans and these sort of statements. So this news came out. This was published in a Bloomberg story 2 days ago on November 2nd, on Tuesday. And in my opinion, that's why the market had such a big reaction on the 3rd, yesterday, Wednesday the 3rd, as this is one of the big stories that's happening right now. China basically going all out nuclear. And you can tell by the numbers that I just stated, the demand is huge. Every month in our monthly newsletter, we discuss the implications of China as part of the growth story. We actually kind of circumnavigate the globe within the newsletter and highlight any developments within certain countries, especially that have larger implications for global nuclear growth and or the uranium investment thesis. And so China is obviously a focus that we put some time into every single month. And we're going to get into more detail on this for next month's newsletter. But needless to say, this kind of statement coming from the CGN chairman just underpins essentially everything else that's happening here. So China, we know that China is sitting on a pretty substantial inventory, but even the inventory that they're sitting on right now, if you consider that initial core load of 150 million pounds plus 66 million pounds a year, that's essentially maybe a few years, less than 5 years of operating uranium supply sitting in their current inventory right now. So anybody who thinks that China is just going to if they're not going to continue to seek out new sources of uranium and or are going to sell uranium into the market, at least from their strategic government inventory, that's just not going to happen. And clearly they need new source of uranium going forward to feed this type of growth. As mentioned yesterday and in most episodes, if you are interested in our newsletter service, please send us an email, support@uraniuminsider.com. We will send you a free sample newsletter from a previous month and answer any questions you might have going forward. All right. Thank you so much for tuning in. We'll see you guys tomorrow.